Welcome everybody. I will start with the Sandhya. Om Bhurbhava Swaha Tatsaviturvareniyam Bhargo Devasya Dhimahi Diyo Yo Na Prachodayat. Om Shano Devishvishte Apo Bhavantu Pitaye Shayor Vistravantu Na. Om Vak Vak, Om Prana Prana, Om Chakshu Chakshu, Om Shrotam Shrotam, Om Nabhi, Om Hridayam, Om Kantha, Om Shiraha, Om Bahubhya, Yasho Balam, Om Kartalkar Prishte. Om Bhu Punatu Shirasi, Om Bhuva Punatu Netrayo, Om Swaha Punatu Kanthe, Om Maha Punatu Hridaye, Om Jana Punatu Nabhyam, Om Tapa Punatu Padayo, Om Satyam Punatu Puna Shirasi, Om Khambram Punatu Sarvatra.
भाई तू आ जाए मेरे को जाने दे।
Om Bhu, Om Bhava, Om Swaha, Om Maha, Om Jana, Om Tapa, Om Satyam, Om Ritancha Satyanchi Satyachabhidhat Pasodhaya Jayata Tato Rave Jayata Tatha Samudro Armana Om Samudra Dharnavadhi Samatsaro Ajayata अहोरात्रि रात्राणि विदधाद विश्वस्य मिश्रतो वशी ओम सूर्या चंद्रमसो धाता यथा पूर्वं कल्पयत् दिवं च पृथ्वीं चान्तरिक्षमतो स्वाहा ओम प्राचीदि अग्निरधिपति रसितो रक्षिता दित्या ईश्वा तेभ्यो नमो अधिपतिभ्यो नमो रक्षितभ्यो नमः ईशुभ्यो नमः एभ्यो अस्तु यो अस्मान् द्वेष्टियं वयं दिश्मस्तम्भोजम्भे दद्मः ॐ दक्षिणाधिगिन्धरोऽधिपति तेराश्चिराजी रक्षिता पितर ईश्वा तेभ्यो नमो अधिपतिभ्यो नमो रक्षितभ्यो नमः ईशुभ्यो नमः एभ्यो अस्तु योऽस्मान् द्वेष्टियं वयं दिश्मस्तम्भोजम्भे दद्मः ॐ प्रतीचि दिग्वरुणोऽधिपति पिदाकु रक्षितानमिश्वः तेभ्यो नमोऽधिपतिभ्यो नमो रक्षितभ्यो नमः ईशुभ्यो नमः एभ्यो अस्तु योऽस्मान् द्वेष्टियं वयं दिश्मस्तम्भोजम्भे दद्मः ॐ उदीचि दिक् सोमोऽधिपति स्वजो रक्षिता शनिरिश्वा तेभ्यो नमोऽधिपतिभ्यो नमो रक्षितभ्यो नमः ईशुभ्यो नमः एभ्यो अस्तु योऽस्मान् द्वेष्टियं वयं दिश्मस्तम्भोजम्भे दद्मः ॐ ध्रुवा दिग् विष्णुरधिपति कल्माश ग्रीवो रक्षिता विरुद्ध ईश्वः तेभ्यो नमोऽधिपतिभ्यो नमो रक्षितभ्यो नमः ईशुभ्यो नमः एभ्यो अस्तु योऽस्मान् द्वेष्टियं वयं दिश्मस्तम्भो जम्बे दद्मः ॐ ऊर्ध्वा दिग्बृहस्पतिरधिपति शिवत्रो रक्षिता वशमिश्वा तेभ्यो नमोऽधिपतिभ्यो नमो रक्षितभ्यो नमः ईशुभ्यो नमः एभ्यो अस्तु यो अस्मान् द्वेष्टियं वयं दिश्मस्तम्भो जम्भे दद्मः ॐ उदयं तं सस्परिस्वः पश्यन्त उत्तरं देवं देवत्रा सूर्यं गनं ज्योतिरुक्तमम् Om Udutyam Jat Vedasam Devam Vahintaketava Drishe Vishwaye Suryam Om Chitram Devanamud Gadhanikam Chakshurmitrasya Varunasya Apradhava Prithvi Antarikshagam Surya Atma Jagatstha Sto Shascha Swaha Om Tat Chakshurdevitam Purustar Shukram Mucharat Pashem Sharada Shatam Jivem Sharada Shatam Rinuyam Sharada Shatam Prabhavam Sharada Shatmadina Syam Sharada Shatam Bhuyascha Sharada Shatat Om Bhuvavasvaha Tatsaviturvarenyam Bhargo Devasya Dhimahi Diyo Yo Na Prachodayat He Ishwar Dayanidhe Bhavat Kripaya Nena Japopasanadir Karmana Dharmat Kama Mokshanam Sad Siddhi Bharvenaha Om Namah Shambhavaye Cha Mayo Bhavaye Cha Namah Shankaraye Cha Mayaskaraye Cha Namah Shivaye Cha Shivdharaye Cha Om Shanti Shanti Shanti. Okay, so today we are our topic for our monthly Mahila Samaj is give a child you love a unique gift of a strong financial foundation. It's the speaker is Veenitha Bokaria. Just want to give a little introduction. Veenitha Bokaria has been at New York Live since March 2017 and achieved all the first year milestones: career, life success, life producer, life achiever, and life foundation awards. She was recognized by the Westchester GO as the Rookie Agent of the Year in 2017, New Org Agent for Most Lives Protected Award, Council Qualifier in 2018, Centurion Award winner, achieved prestigious MDRT in first full year as an agent. She was promoted as a partner in July 2019 and received the Partner of the Year in 2019 and 2020. She secured the Top Recruiting Legend in 2020, Top Recruiter Most Qualified Candidates 2020, qualified as Top 50 Partner for 2019 and 2020. Veenitha is born and raised in India, migrated to Dubai after marriage, had a very successful career for 15 years in sales and marketing in various industries. Prior to coming to New York, Veenitha was a CEO for 5 years of a multinational company and was leading a huge organization in Bahrain, Qatar, Oman, Kuwait, Philippines, and Dubai. She is married to she's married to Vineet and has two lovely boys, Vansh and Vidhan. She lives in Scarsdale, Westchester. Sense of purpose of helping people drives her passion and commitment. Welcome, Vineetha. That was beautiful qualifications and uh, very. I like the names with the V. Your children's name.
It stands for victory, right?
Yeah, of course.
Vijay ho.
You are in Scarsdale. I live in New Rochelle, so very close. You're my neighbor.
That's awesome. Thank you so much for
Welcome.
that awesome introduction and for your kind words. Thank you, Arya Samaj, for inviting me. Thank you, Geeta ji, for offering this opportunity for us to share and provide some knowledge. I've always wanted, to educate the community. I've been doing that for the last 4 years. I'm happy to be here. It's my privilege and my honor to be here and represent New York Life and share, the concepts that are really doing well. So today's concept obviously is child gifting. So, getting kids have a kickstart to their financial, laying a good financial foundation for their future. So please help me share the screen. I'm going to just share the screen right now. Okay, and 1 second. Let me just go. 1 second. Which one are you able to see my screen which says protect them for life? Which one are you seeing right now?
Yes, we can see this one now. Protect them for life.
Protect them for life. Okay, that's awesome. 1 second. Just want to make sure 1 second. All right, perfect. So I'm going to get started now, right? So obviously, welcome to, 1 second. I'm going to put this here. All right. So welcome to our discussion on child gifting. Today's talk is all about how to give a child a gift that they'll never outgrow, right? So let's go to the next slide. All right. So obviously we all have children, and some of us might have grandchildren, right? And what are the kind of gifts that we usually give, right? Obviously we give them toys maybe, or we probably give them clothes or maybe some money, right? So basically normally, right, they fall into these three categories, right? Usually. So will they remember us for the clothes that we bought them? Or, as you know, that children obviously outgrow their clothes, outgrow their toys, right? The toys that we buy them, and even the money that we give them, they spend it on their games. I have 2 boys, 14 and 16. If I give them any money, they're going to do gaming. Okay, that's what they want to spend on, right? Being boys. So what we're here to discuss about today is about a gift that they will remember, right? 20 years from now, 30 years from now, 40 years from now. It's something that's going to last them for a lifetime. All right. So we're going to talk about a gift that would never be outgrown or wear out, that's guaranteed to increase in value. Okay. Something that will not become obsolete. All right. It won't lose its value in any economy, and you'll always be remembered for. And the way we present this whole concept, right, it's phenomenal. When we share this concept with either grandparents or with parents, they usually love it, because it's a nice letter, especially if you have a newborn child. And if you want to give the child a gift that can last for a lifetime, the way we present the whole concept is with a letter that actually introduces the advisor that you dealt or created this concept with, and then how you're expressing your love towards a child. We put pictures of you with the family, and that's how we present. If you decide to go ahead with it, okay, and that's how we present this whole child gifting folder. So it's also very emotional, and we love, right? We are very bonded with our kids in our culture. Like in the Indian culture, we are very, very bonded with our kids, right? And we always think about leaving a legacy, maybe buying a property for our kids, or maybe buying jewelry for them. And, we believe in giving our kids a great head start in any ways, right? We do believe in that, right? And the question is, especially in this country, right? If we leave properties for our kids or anything, they're going to be exposed to the taxes, and we all know how the IRS works out here, right? And not to talk anything negative, but I'm just trying to say that there's a lot of ways that we can have money set aside for them, which is growing tax deferred and comes out tax free. Okay, so the gift of whole life insurance, right? Obviously, we're not thinking about, for kids especially, trust me, I know I have 2 boys too. We don't think about death for kids, right? That's not the reason why we buy it. Okay, so it's usually this particular gift of whole life. It's a customized whole life, all right? It's not like a regular whole life policy, if you guys know what that means, right? This is something that would never wear out. Like, as long as the premiums are paid, the owner can enjoy the benefits and protections. This cannot be outgrown. Life insurance protection can last a lifetime, right? It will never lose value in any economic environment. Okay, it's guaranteed to grow. And it keeps on giving protection, cash value, and dividend potential are just some of the benefits of this particular concept. Okay, so I'm going to move on to the next. For many, right, the American dream means that each generation will do better than the last, right? How we can help you fulfill that dream by giving the child you love a financial leg up with a permanent cash value life insurance policy, which can be designed to help pay for college, buy a first home, or maybe, you know, start planning for retirement, even before starting a career. So imagine that, right? I wish our parents did that for me, right? My parents did that for me. While gifts of toys and clothes are quickly outgrown, a value of whole life grows as your child or grandchild grows, giving him or her a head start towards a successful financial future. Okay. So what it means for them, it establishes lifelong insurability. It grows cash value from an early age. It offers access to money that's generally tax-free for major life expenses like college, home, retirement, and legacy. Okay. What it means for you, right? Establishing a legacy with this selfless gift. Do something for the child you love that the child cannot do for them himself or herself. Usually, you know, when you think about kids who are even 24, 25, that around that age, they usually don't understand the importance of this. And usually people at my age, which is like 40s, early 40s, are when they start thinking about, okay, protection, replacement of income, things like that, right? So with age, what happens is you tend to pay a lot more, okay, to have something, a concept like this, okay, where you can set up for retirement, but you're tending to, you have to fund the policy with a higher premium because it's based on age. Okay, since the kids are, it has zero cost, hardly any cost for life insurance, right, for a child. That's why it grows faster for kids, because there's a lot of time on them that would help to grow the cash value, right? Provide the child with a substantial and meaningful gift for which you will always be remembered. Now, think about the life events, right? A child is getting married, or maybe starting from school, right? Goes to college and then wants to start their own business maybe, or maybe wants to get married in a grander, bigger, better way, right? And they can remove the money from this particular concept, okay? And they can fund that particular event, okay? Or even their business. So that's what we're talking about. So there's a concept called $1 Million Baby, wherein you can set aside a certain amount of money every single month just for 15 years, or you can fund a lump sum amount the way you would like it. It's through PDA, which I'm going to discuss really shortly. All right, you can do that. So you can basically give access to them for that money, right? Obviously not when they're young. When you feel that they're independent enough, you can make them the owner of the policy so they can enjoy those benefits. Or you could be the owner and you can still have control on that policy, even if that child becomes an adult, okay? And so imagine leaving a retirement money for them wherein they can have access to $100,000 every single year if you did the $1 Million Baby concept. So I'm just gonna share with you guys what it is, right? So you can get an overview of everything, and then we can talk later. If there are any questions, you may ask me, right? So let's take advantage of this opportunity to share in this special moments in the child's life, right? That's obviously we want to do that. Like I mentioned, the age matters a lot, right? So if you look at age 0, when you do, right, look at that guaranteed cash value growth. If they turn 10, then look at the growth. And if it's issued at age 20, look at the cash value growth. The reason why at age 0, there's so much cash value growth, like I said, there's a lot of time on hand for the money for the dividends to accumulate, because it's compounding basically. All right, so that's what happens. So cash value will have more time to grow, and also giving the gift of insurability. So like I mentioned, it's tied to age. So at 0, if the premium is this much, then at age 20, the premium is going to be higher. That's what we're showing on this slide. Okay. So this one, how the policy purchase option works. So there's a rider called policy purchase option, where a child, so let's say you take something with a face amount of 500,000 or even 100,000, for example. Okay. And when the child turns 22, every 3 years, the child can buy additional insurance if you put this policy purchase option 9 times from age 22 to 46. So at age 22, then at age 25, and then age 28, 31, so on and so forth, until age 46, without proof of insurability. You know, as we know in America, most of the kids over here have diabetes. Okay, so locking the insurability, and even we don't know what their habits are going to be like. If they're going to catch up on wrong habits, you know, or they might have some health condition, and then they become uninsurable. So that's a very important piece to lock insurability, right? And give the ability for the child, so that when child turns or gets older, they can buy additional insurance without any medical underwriting. Okay, as we know that the health takes a big that's a big reason, right? That's how we the policy is underwritten based on health. Okay, and also driving record and things like that. So we don't know what our kids are going to be in future, so it's good to have it at a younger age. Okay, why cash value whole life makes sense? Okay, that's what I want to talk about now, because of these factors. It's guaranteed death benefit. Okay, the premium guarantee is never to increase, right? So it's whatever premium is what you're going to fund the policy with, that's never going to increase over a period of time. It's going to remain constant. Okay, and it's for a limited period of time. That's guaranteed cash value growth. Okay, and then there is additional coverage advantage or dividends that you can have, growth. Okay, there's tax deferred and cash value growth, right? Protection from creditors. Nobody can take this away. Okay, if you default in payments or whatever, right? IRS, like, you know what they do, right? They come and they block your bank account and things like that. This is free from creditors. So again, a good reason why a person should do this, right? It's tax-free growth, and also it's tax-free access to cash value as well, and income tax-free death benefit. Okay, so that's a nice way to leave a big chunk, right? So it's a win-win. You're taking advantage of these valuable benefits and helping them start their financial future. The cash value in this policy grows tax deferred, allowing for maximum compounding. Okay. So key considerations, right? A whole life policy can last a child you love his or her entire lifetime. The death benefit is a tax-free, probate-free way to pass on your legacy. There's no waiting period. Okay, so it doesn't have to go through the probate period and all of that. Okay, the cash value can be used to start your little one down the right financial road. The sooner you get started, the more cash value that accumulates, and the lower the premium should be. So those are the key reasons, right, why you would consider this. Transferring assets via the premium deposit account. So let's say like you're a grandparent and you wanna gift your grandchild, right? So in a way to gift it is through a PD account, where it's just one lump sum premium, which you can use to fund the policy over a period of time, which means no premiums will be due. Okay, once you make this lump sum amount to PD account. Now, what are the benefits with that? One second. Is that you can basically, it's a premium paying feature, right? It's available on New York Life custom whole life policies. It's different from whole life, which allows you to balance cash value accumulation and guaranteed life insurance coverage. Custom whole life allows you to pay premiums for a specific period of time, as little as 5 years, to help maximize the cash value growth in the policy. So you can start with 5 years, fund the policy for 5 years with one lump sum amount, or 7 years, or 10 years, or 15 years, the way you want to do it. Okay. Maximum is actually 14 years. Okay, so the next steps is obviously, let's meet to discuss how best we can act on your love and protect those who matter the most to you, right? And the last one is like, thank you, right? So before I want to just stop share, and I want to start share again, because I want to share this portion. One second, I'm going to stop share. Any questions at this point that you may have?
So I have a question, Rani.
Yes.
So once they put it for a few, like a limited amount of years, like 5 years, 7 years, and after that you just take out the money and
Yes.
use it. Okay.
So great
yeah.
question, right? Great question. So it depends, right? So if you're giving the child, whether you're doing a lump sum amount or you're paying periodically, right? You can decide, like, there's no premiums required after a certain period of time. So you can dictate that based on the age of the child, right? So for example, I have a 13-year-old, I have a 14-year-old and a 16-year-old. When I took policies for them, they were 10 and 12, right? So I wanted to do this for like 15 years for them. So maybe there's not enough time for the money to grow for college, but they might have enough money to leave a legacy for them, where they can have life events. When they get married, they can have access to that money, right? So they can pull out the money from the cash value. They can pull out up to 90% of that cash value to not trigger any or to not make that policy lapse, okay? Because if you take more than 90% of the cash value, then the policy will obviously lapse automatically.
Okay.
Okay, so I want to just show you, share with you one illustration so you can get an idea about what it is. Okay, so
Veenitha, we had one more question. I think, Aradhana ji, did you have a question?
Yeah, I just want to ask about the, so this is called a life insurance, but it's not for the life insurance. It's a fixed amount of time of the money you invest for like 4 year or 10 year or 20 years, and based like it can be used for the education as well as for
correct.
any and it's lapsed when let's say if it is for 5 years, but kids need in 4 years. So how that works? Like it going to lapse or?
Great question, Aradhana ji. Right. So this policy is not very short-term policy, right? Because as like I mentioned to you in the presentation, you need some time for the money to compound, right? So if you need access to that money in 4 years, it might not have that much cash value growth, right? But if you have like a good timeline, 10 years, 12 years, 15 years, 18 years, you will see that the money is compounding. And I'm going to share with you an example so you'll get a better understanding about this. Okay, so we can do it as per the budget, right? The one I'm showing you right now is how you can set the child up for lifetime. This is for a newborn baby, what I'm showing you, okay? So I'm just going to share my screen. So just allow me to share my screen so I can explain. And then if you have any questions, I'm happy to share that as well, okay? So are you able to see my screen where you see set for life?
Yes.
Okay, great. Thank you. Thank you for letting me know that, right? So this is a policy which is on a, so you see that issue age is 0. Do you see that?
Hmm.
I'm just trying to see if I can make this bigger.
Very small though.
Okay, abhi dikh raha hai?
हाँ,
Okay, perfect.
हाँ, ठीक है, better.
Okay, maybe thoda aur bada karti hu. Okay, abhi dikh raha hai?
Yeah.
Okay, great. So you can see that issue age is 0, right? And this is a juvenile policy. The payment period is 15 years. Okay.
Mm.
So the funding period is it's for 15 years. You're funding it with $407 every single month for that child. Okay. Now, if you look at this, right? So we did give the dividend option rider. So I will talk about that later. But let me go to this policy and show you how it works, right? So if you look at this policy, right? 1 second. Yes. So you can see for the first 15 years, okay, we are funding on an annual basis. We are funding about $6,000 every single year.
Mm.
Okay. Do you see this column?
Yes.
Right. Okay. And if you look at the cash surrender value, right? This is the cash surrender value. Okay. And this is how the cash surrender value grows over a period of time. Okay. So if you look at the 15th year, the child has $94,000. You're putting in $6,000, but the child has $94,000. So basically you put in 90, right? But if you fund it in a lump sum amount, right, it grows faster, obviously, because you'll use it to fund either for 5 years or for 10 years or 14 years or 12 years based on the age of that child. So the money grows faster like that. Okay. Now we are showing you how this money starts to grow. So you see how you're putting in money for 6,000 for 15 years. So that comes up to 15 times 6 is $90,000, right? Okay, and you're seeing how the money grows to 100,000. Do you see that in cash value? Okay, but we started with almost $500,000, and the death benefit now has increased to $964,000. Do you see that? Okay.
Mm.
However, death benefit is not the reason why we are buying it, but it's also locking insurability for future. Maybe he doesn't need it now, but maybe when he turns 65, 70, he might need it, right? Okay. So what I'm going to show you now here is there is no more premiums required after 15 years. As you can see, it's 0, right?
Mm.
Okay. Now we're showing you how you can withdraw. So when the child turns 18, we're showing how they can withdraw $10,000 every single year. This withdrawal is tax-free. So you're withdrawing $40,000 in 4 years for college. Okay. But so the money has grown to $107,000. Do you see that? Over here, 1 second. Let me use a highlighter so you can see it. 1 second. Let me spotlight. So do you see this one here?
Yes.
Okay, so it's grown to 107,000, right? Now you're seeing that after withdrawing this money, obviously, because you withdrew the money has gone down, right? So it's come up to 99,536. Do you see that? So obviously, when you're withdrawing the money, the death benefit also is reduced. Do you see that? Okay. Now what I want to show you is, one second. What I want to show you is, okay, now we are showing at age 30, okay, let's say the child needs money, right? Either to buy, either for wedding or for down payment or to start a business. $40,000 he can withdraw, but look, the money now has grown to 152,000. How much money did we put in? We put in $90,000, but we have withdrawn already 40,000, and still money is growing. So which means $50,000 has now grown to 152,675. Now we're withdrawing 40,000, so now it's 119,000. Do you see that?
Yes.
Okay, and now we are showing how at age 65, when the child retires, at age 67, actually, we're showing how when the child retires, the child has, look, so one second, let me just, 1 second. I
55,000.
want to clear the drawings. Okay, and I'm going to go back again to Spotlight. So I can show you how, we are showing how the child withdraws at age 67, right? How the child withdraws $35,000 every single year. How much did we put in? We put in $6,000, right? And we did that for 15 years. But here we are showing how they're withdrawing this for almost, if you look at this, 1 second, I'll have to stop this again. Okay. So look, from age 67, we are showing how they're withdrawing money for the next 15 years till age 81. You see that?
Yes.
Okay. Even after withdrawing all this money, right? We are now showing, look at the cash surrender value, which is, 1 second, which is $793,000. And the death benefit is $1.4 million, even after withdrawing all this money. So imagine, it's not like we give, what do we give, right? We give jewelry, we give property, we give all of these things to our kids, right? The property value can go up and down, the jewelry, you know, I don't know. I personally don't wear so much jewelry. My Shadi Dahej mein bahut sara jewelry mila tha, but it's not there with me. I don't even use that. It's all in my safe deposit locker, right? Most of us have it like that. I wish I had something like this, which grew over a period of time for me, which I could have access to for every life event that I have in my life. So that's what we're talking about, okay? So it's a future legacy of over $1 million, actually, if you see, for your child, okay? Now, $365,000 of total withdrawals is what we have. $865,000 of withdrawals have been shown, okay? When we withdraw all this money, we're showing that, but still the child has. So this is the concept, right? So if you have any questions, I'm happy to share, to clarify any questions that you may have, okay? And I want to just tell you that you don't have to do $400 as I showed you. We can customize a solution based on your situation and based on how much you want to set aside, if you're interested. Okay, so you can obviously feel free to contact either Geeta ji, or you can get in touch with me. I can give my number. I have few of my advisors here with me on the call. There's Sonal, there's Tara, there's Amit, right? So you can get in touch with any of us, and we will be happy to, take you through a one-on-one basis. Happy to customize a solution for you. Okay, if you want to learn more. And now I open up for questions. Hopefully it was valuable information that you, at least it's nice to be aware of what's out there, right?
So I have another question. It may be my ignorance, but death benefit, that means benefit after death that the beneficiary gets, is that?
Yes.
Okay.
Yes, absolutely.
Okay.
Absolutely. So the child would never have to care about, I need to buy life insurance, or they don't have to care about that, because you already set them up for retirement, you set them up for college, you set them up for education, you set them up for their wedding. Like ek hi baar mein, you're like, of course it's, you look at it like, okay, so like the way I've done it, I'm putting in $1,000 for each of my kids every single month for the next 15 years.
Okay.
Okay, so why? Because then they can have access to more kind of money. Now here, what I showed you was 35,000. The way I've designed it for my kids will have access to almost $80,000 every single year for 20 years at retirement. And even after that, they would have $1.7 million in cash value, and they would have death benefit of $2.8 million. That's how I designed it for my kids. So we can customize it based on individual situation. And of course, my first, in fact, when I became an advisor at New York Life and I learned about this product, I was like, I wish somebody shared that with me when my kids were younger. I would not have to worry about their college. Okay, they don't have to take student loans. Okay, and I wish I set this aside for them while they were younger, so I would have had that enough cash value while they go to college, because obviously I started much later. When my child was like, my one son was almost 10, the other one was 12 when I started this. Okay, so obviously they're not going to have access to $30,000 or $50,000 for college for 4 years, because there's not enough of time for it to grow. Okay, unless I put a lump sum amount, which obviously I couldn't have because I just moved from Dubai. Didn't want to put and block a lump sum amount of money for each of my kids. As soon as I got here, because I wanted to buy a house and all of those things, that was my priority, right? So I just did it like on a monthly or yearly basis, and but one thing is there right now, I don't have to worry about, or I would have to give him something or leave something for him. Of course I want to, I will, right? But that's later in life, right? But at least I've set them up for lifetime. That's why the whole concept is called set them for life, because you really can use this concept right now, right? Where else can we put money? When you put money in 529 plans, right? 529 plans are great. Okay, we sell them too. Okay, they're great, but you can only use that for education. You cannot use that for any other thing besides education. Okay, and if you withdraw money from 529 plans, if you use it for something else, there's penalties, there's a lot of things, right? This is tax free. There's no penalties on it, right? It grows tax deferred, it comes out tax free. And you're giving the ability to get this life insurance also along with it. So in future, they might need, now they don't need it, but future, when they have kids and they have, when they get older, they might need to leave something for their loved ones, right? So how about giving them this kind of a gift, right?
Veenitha ji, we have a question on the chat that
Yes.
How much is the fee charges?
There is no fees for this. There is zero fees on this. It's unlike how it works in a bank. That's why it's a little bit different, difficult to understand, right? Because there's no fees on this. We don't charge any fees for this. Okay, it's your money. You're putting it in the bank or you're keeping it here. You're just repositioning some of your assets, right? And you're letting it grow. And if you leave it for some time, it's guaranteed to grow even faster, right? Of course, if you're looking at a timeline of 5 years, you can't expect too much growth unless you're putting a lump sum amount, right? But if you're putting it in breaks, you have to give it a little bit of time for it to grow, right? Because our dividends, New York Life is a mutual company. Okay, what I mean by mutual is that the company is owned by policyholders. Okay, so the profits of the company are given in form of dividends. Dividends is calculated based on a lot of things, a lot of factors, interest rate, how we make the money. So after we set aside all our expenses, running expenses and things like that, then with all the money that we then declare dividends. Okay, and that's how we distribute dividends, and we declare dividends every single year. Okay, so this year we gave about $1.9 billion in dividends. Okay, it's a record-breaking dividend amount. And New York Life has been in the business for more than 176 years. We've paid dividends for more than 168 years in a row. Okay, so it's a great company that you can trust. And because we have these strategic business alliances with other businesses, so our life insurance portfolio, right? So obviously you might think, where are we investing? We're investing in AAA graded bonds and in real estate, right? And that's how the company is investing. And we also have strategic businesses. So we just bought Cigna, okay, last year, just before the pandemic, we bought Cigna. And now when the pandemic happened, obviously New York Life had a lot of claims because we have a lot of policyholders, right? So when our life insurance business was being affected because of the pandemic, All right. We had other strategic businesses that we could pull out money from to fund our life insurance portfolio. Okay. So we have more than $330 billion in assets, and we have more than $26 billion in surplus, which means that if all our policyholders died tonight and we gave them the claims, we still have $26 billion in surplus. Okay, so people ask, like, is it FDIC approved? We are bigger than FDIC. FDIC is worth $25 billion. Okay, this is a Fortune 67 company amongst the top 500 companies in the world. Okay, so it's important to know whom you're dealing with. Where is your money going to be safe or not? This is not a it's a huge company. Of course, if you're from India, we know that New York Life is a big company. Okay, I had a New York life insurance policy from India. My dad had taken, but he did not take all these concepts. He just bought a regular whole life over there. Okay, so that's how I knew about New York Life. And the reason why I joined New York Life is because, it's my personal experience, right? So my dad, just before I moved from Dubai to US, I'd gone to India to meet my parents. My dad had 2 massive heart attacks. We were in Kodaikanal on vacation. Well, I was with my dad, my extended family, my Nanyal side, everybody was there. And my dad had 2 massive heart attacks. When the insurance person came and, gave that big fat check to my mom, I understood the sigh of relief I saw on her face. I decided, you know what, I'm moving anyway to the United States. I have to start my career. I can't do what I was doing in Dubai because I was running a video streaming company there. This market was too mature for that. I said, you know what, I want to be that person going and delivering those checks. I'm going to join New York Life. I chose this company, right? And I'm happy to share, right? I've helped so many families. I've had families where I've even delivered death claims, right? So for one of my clients, his dad passed away. He had Alzheimer's, and I delivered a $2 million check to his. That's when I understood the true value of what I do, right? And obviously that's why I chose this path, and I've got into management now. So I have a lot of advisors in my team who are doing that. So that way my reach can be even bigger. So, but individually, I, helped 125 families in my first year. And now I have so many advisors in my team. So they can, if each one of them reached out to 100, then my outreach becomes 1,000. Ultimately, that's my goal, right? I want to educate families about importance of different concepts and build a great foundation for themselves and for their family. Any other questions?
Yes, we have one more question on the chat.
Yes.
Is there any surrender charges?
Well, there is no surrender charges in this because this is not like a 401k or like any other thing. So there is no surrender charge on these policies. So whatever cash value you have, if you want to surrender the policy, whatever cash value you have, you would be given a check for that. And that's it. And you can stop paying the premium, or you can call New York Life, or you can call your advisor and we can stop that policy. So there is no penalty for lapsing the policy.
So Veenitha ji, एक question है कि like I started policy for my daughter for 15 years, and let's say after 8 years she's able to pay by herself. So still I have to hold and give, or it can transfer to the kid?
Great question. You can always transfer ownership or beneficiary, or you can make any changes you want in your policy, as in you can change the address, you can change the name of the beneficiary, you can change the owner on the policy, you can make all these changes online. Okay, it's like how when you open a bank account, you have access online, you have online access to your policies as well with New York Life. And of course, your advisor is going to be there. We are very good at that because we do a lot of reviews with our clients. So every 6 months we do a semi-annual review or an annual review where we sit down with our clients and we show them exactly what's happening with their policy. And because life events happen and things happen in people's life, right? People get promoted, people have kids, people buy houses, right? So life events happen. So we want to make sure whatever plans we put in place today, it's going to work for you in the future as well. Okay, because of course in future we might get a rise in a salary, or we might, our income might change, things might change, right? We might have few more additions in our family. We want to make sure we're always keeping in pace with that. That's why we do something called semi-annual reviews or annual reviews. If you have a good advisor, your advisor will constantly stay in touch with you. And as I know some of the people on this call are my clients. I'm sure they can vouch on that too. Every time they call me, I'm always there for them. Okay, because like I said, my ultimate goal is to just make sure that I'm there, right? So having a good advisor is extremely important, who can be there for you anytime you need them. It's not like calling an 800 number and being on the phone for like so many minutes or even hours sometimes. All right, you can call your advisor is going to be there for you. Okay, so like things happen when the pandemic happened, right? All the insurance companies, right, they were asking for death certificate. Without death certificate, you cannot get a claim. All right, New York Life actually is the only company, right, and I can proudly say that it's the only company without receiving death certificate. When the pandemic happened, they were giving death claims to the family just with a confirmation from the hospital or the doctor's office. Okay, that we even before we received the death certificate, we were giving the death claims. So it's very important to deal with the right company. Sometimes people are like, oh, but this company. I'm like, why are we setting this up? We are setting this up so our child can have a good legacy. You want to be with a company that's going to be here for generations, not just be here for 20 years, 10 years, and after 15, 20 years, you don't find that company. Okay, we have a strong financial backup. We have the highest financial rating. So it's a great company that you can work with. I'm very proud of New York Life, really. I always tell this to people, I bleed blue, I don't bleed red. Because New York Life is blue.
I like the
I believe in the
commercials.
company. Yeah, I'm a
Good
brand ambassador
commercial.
of New York Life. Yes, thank you.
I have one question, Veenitha.
Yes.
Tax, you mentioned the tax deferred. So when do you pay tax on that then?
You don't pay tax on it. Okay. You don't pay tax on it because your money is going tax deferred, right? So when the money comes out to you tax free. The only time you will pay taxes, if you've had too much of growth and you take initially itself the money, you will not pay tax, you will pay interest. Why would you pay interest? You will pay interest. It's taken as a loan from your cash value. Okay, so it does not impact your cash value growth.
Oh, okay.
Okay, so that's why you never pay taxes on this. You only pay interest, and the interest is 5%. The dividend this year is 6%. So it kind of offsets it. As long as you pay the dividend, the interest, it will not impact your cash value growth.
Oh, okay.
Okay.
Thank you. It was very good topic and
thank you.
very
Thank you
well
so much.
done.
Thank you. I hope I provided value. If you have any more questions, if you have time, like another 5 minutes, maybe you can ask, right? And I'm happy to share with you.
One question, Veenitha, I have. Can you hear me?
Yes,
Yes, Rajiv.
Okay, perfect. So the thing is, like when you talk about the kids account, now the thing is when they own this particular policy, like when they are 18, they own it themselves, like how it works.
It depends on the parent when they want to give the ownership to the child.
Okay,
So
so
for
you control
example,
it. Okay.
yes. So for example, right, Rajivji, thank you for asking that question though.
Sure.
And first of all, namaste. Like I'm
Namaste,
hearing your voice after a long time.
Thank you.
My coach, my Pink Panther team coach. Right. I appreciate you attending this session, and thank you so much for encouraging me and us, basically in the team. Thank you for that. But you're right. Like sometimes, like I have an Italian client. I don't want to name him, but I have an Italian client. He always has a problem with his kids because his kids are very, very naughty and they're into bad habits and things like that. He's like, I don't want to give ownership to my kids. I want to keep ownership to myself. I'm like, perfect. You can, you can keep ownership as long as you want. Okay, whenever you're confident that the kid is okay now to handle the finances, you can give them the ownership at that time. Okay, it's very easy to do that. It's just a call away to your advisor, and your advisor will send you the change of ownership form. You need to fill that up, and it will be instantly uploaded in the system.
Okay, perfect. Thank
Great
you so much.
question. Thank you. I mean, thank you all for attending this session. I'm really happy. I'm feeling like buying another child gifting policy. Right.
तो नहीं
So-
विनीता, ये ना दिवाली बम्पर से कम नहीं हुआ कि आपको कोई फीस नहीं देनी है, कोई सरेंडर चार्जेस नहीं है, प्लस
Exactly.
कभी टैक्स नहीं देना है. सो इट इज रियली लाइक अ विन विन सिचुएशन.
Absolutely.
और मैं आप सबसे कहूंगी कि अगर आपको विनीता जी और कहीं नहीं दिखें तो कोई ना कोई क्रिकेट फील्ड में जरूर दिख जाएंगी. यहाँ पे सारे पिंक पैंथर वाले भी हैं. सो विनीता जी, I just want to add, I should have said this in the beginning, but it is such a great pleasure to know you. Such
Oh.
a positive and encouraging person, and always ready to help. So, it is really, really good to be with you, and and you joining us and sharing this with us. I'm really looking forward that we'll do more sessions with you like this.
Yeah, absolutely. Thank you, Geeta ji. But besides this, right, we also do everything else, right? We do long-term care insurance, we do retirement planning, we do business solutions, key employee insurance, you name it, we do it. Stocks, bonds, mutual funds, we do everything. Okay, we do everything. This is just one of the pieces that I wanted to share. I thought that Christmas is coming up, and I know though some of us might not celebrate Christmas, but in America, everybody celebrates Christmas, right? So we are just part of that clan, right? And I think that this is the best thing that we can give to our kids, and that's why I'm happy that Geeta ji chose this topic that I could discuss with all of you. So thank you for attending, and thank you for giving me the opportunity. And Geeta ji, thank you for your kind words. I'm really grateful to you, to have given us the opportunity to share. But I wanted to introduce my three superstars in my team. There's Sonal Saraya. Sonal, are you there? Can you say hello to everyone?
Hello.
And
Hi,
then
everyone.
we have Tara Joshi. Joshi, can you say hello?
Hi, guys. How are you?
Awesome. And then we have Amit Patel. Amit, can you say hello to everyone?
Hi, everyone.
Hello.
Great. So thank you. This is my power team here, right? Three of them from my clan that's attending the session. So thank you for attending. And overall, thank you, Arya Samaj. Like, I wish I can contribute more to Arya Samaj, and New York Life is there to support, and whatever way that we can. Okay, thank you.
Thank you, Veenitha ji, and thank you, everyone. Veenitha ji, at this time, I would like to ask our Arya Samaj President, Dr. Rakesh Abdi ji, to say a few words. Rakesh ji, Jitendra ji.
Namaste, Veenitha ji, and namaste your team and everybody who's attending. Thank you for this illustrious, very informative session. Very useful to people of all ages, I guess, retirement and not retirement, and early age investors, and so on and so forth. We really appreciate you sharing this piece with us, and we look forward to, as Geeta ji pointed out, many more to come. And please attend our Arya Samaj too. We have a Havan every other Sunday at Ethical Culture Society, 7 Saxon Woods in White Plains. And once you interact with people and more one-on-one contact, people will come to know more about you.
Absolutely. Thank you for that welcome, and I would love to be a part of Arya Samaj and attend these events. Thank you.
Right. Okay, thank you, Namaste ji, and we can do our Shanti part.
Shanti part, yeah. Thank you. Yeah.
जी, आप करवाएंगे?
मैं कर लूं?
हाँ जी, आप रानी जी आप करवा दीजिए. हाँ जी.
Om
शांति अंतरिक्ष शांति पृथ्वी शांतिरापः शांतिरोषधयः शांति वनस्पतयः शांतिर्विश्वे देवा शांतिर्ब्रह्म शांति सर्वगम शांति शांतिरेव शांति सामा शांतिरेधि ओम शांति शांति शांति. Namaste. Thank you.
Sabko
everyone.
namaste.
Thank you
We have to
everyone.
call Veenitha back soon again.
Yes,
Oh,
Bilkul,
thank you.
Rani ji, I'm thinking that our next, one of our next.
Anji, we will discuss this later.
Yes, so
Okay.
in person में भी कर सकते हैं, बिल्कुल.
Sure. Yeah. Okay.
So,
Thank you.
Very nice.
thank you, Veenitha ji. Thank you, Amit ji.
Good
Tara
Thank
ji.
you
Thank
so
you
much.
everyone for joining.
Bye, everyone.
Thanks a lot.
Happy holidays.
Yeah, happy